Dude, my kids ask me about gold and the McClellan oscillator every other day. I said gold was a sell 3 weeks ago. You don't want to be buying gold in a risk on market. That's like, the first thing your daddy should teach you is you don't talk about Fight Club, and then number two should be don't buy gold in a risk on market. It's a bit of a tale of two cities, right? So here, let me share my screen. It'll help. You violated that 3,200 pivot today. Back at 3,400 in late April, we warned that this was overextended. I said late money longs are chasing the move. People who have no business trading gold are starting to get involved. You had a two-wave corrective. You set a pivot here at that prior secondary support and had a lower high with secondary two-wave corrective that made it a newer low. So it's a tale of two cities. There's people here who are thinking, at some point, this is a very half-assed wedge, but they're thinking, this may be, instead of a distribution top, this could potentially be reaccumulative. And when everything goes to hell late summer around the apex of the wedge, that, our cumulative efforts will be well worth the wait. And we're going to see 3,700 and there will be much rejoicing. But the truth is here that gold is weak and probably headed lower until, the market tops out. So I would stay away from it as a long.
I had a student a couple of weeks ago in the room ask me, he has a position in gold, and asked me what to do. And that was actually, I'll tell you the exact date. It was on April 21st. And that was actually the top. The next day was the top. And my exact words were, any day could be the top, because we were going climactic. And we had put in a doji bar, reversal bar, and we had like the biggest volume bar on the daily chart. So any day could be the top. I wasn't sure we were going to top out yet, but any day could be the top. And that was the top. So if you think about gold just basically accelerated. So as long as it's going up in a straight, in a grind, in a straight 45-degree angle, no problem. It's sustainable. Once it starts to accelerate, then it becomes unsustainable. And gold accelerated right when the market was bottoming. And so you got the double whammy, basically, double effect. And it's coming in right now. Gold, the GLD looks lower to about 280 to the 20 MA on the weekly chart, which is also the pivot on the daily chart. So gold, to me, GLD looks lower to about 280, maybe 275. And then we'll see if it gets there, we'll see how it reacts to support. And that will determine whether we should expect another bounce back up or if it's really done for now. And I think more likely than not, gold is done for now. I'm not saying it's going to crash, but probably lower to 280, 275 on the GLD and stays there for a while. That's what I think.